Good morning. I'm Peter Milios from the Finance News Network. The Dow Jones Industrial Average fell Wednesday as investors contemplated the future of Credit Suisse, a bank with a large international and US presence, and peers. The Swiss bank's shares have plunged 25% after the Silicon Valley Bank collapsed, raising concerns about contagion. The Saudi National Bank, Credit Suisse's biggest shareholder, said it would not provide further assistance after injecting $1 billion. This is on top of the issues the Swiss bank has faced recently, announcing material weaknesses in its reporting and control procedures following a probe by the SEC. Shares are now down over 90% from their all-time highs, and their credit default swaps are pricing in a 40% probability of default, with 2026 bonds entering distress levels. However, Swiss regulators could end up saving the bank, as there are reports that they are in talks about options to stabilise the bank. Overall, overnight, the Dow Jones Industrial Average ended 0.9% lower, the S&P 500 dropped 0.7%, whilst the Nasdaq Composite was just up 0.05%. The major averages, however, were well off their session lows. The Dow at one point was down 725 points, and the S&P 500 briefly gave up all of its 2023 gains. As Credit Suisse dragged down the European bank sector and sparked a broader sell-off in the continent, US big bank shares declined in sympathy. Citigroup slid 5%, while Wells Fargo and Goldman Sachs each lost 3%. Bank of America slipped just under 1%. The financial select sector SPDR fund lost 2.6%, giving up its 2% pop on Tuesday in the US. Regional banks, which rebounded Tuesday to lift sentiment for the broader market, fell back into the red again. The SPDR S&P Regional ETF was down 1.6%, pushed down by losses of more than 20% and 10% in First Republic Bank and PacWest Bancorp, respectively. In commodity-related news, global physically backed gold ETFs experienced their 10th consecutive month of outflows in February 2023, losing $1.7 billion in value as per the World Gold Council report. This was due to a decline in gold prices, mainly due to a stronger dollar and rising yields. And oil prices tumbled around 7% to their lowest levels since December 2021, as traders feared a brewing banking crisis could dent global economic growth. Analysts are forecasting that weakening demand outlook is likely to persist in the short term. Overnight, US sectors were mostly lower. Communication services was the best performer, whilst off the back of the fall in oil prices, energy was the biggest laggard by far. The SPY futures are pointing to a 1.68% fall. Thank you for listening. Have a great day.